Trap Fridays and midweek reversals coming to you again. Today is Wednesday. Thank you guys for tuning in. Forexiapro.com. If you have not already checked out our site, be sure to go ahead and check it out. We have tons of new information on there. We recently updated with a crypto side, so now you have a bunch of different crypto tools, cryptocurrency tools. If you're not sure what cryptocurrency is, feel free to check out our site. Now to jump into this video, we're going to be talking about Friday traps and the midweek reversal, right? The infamous midweek reversal. Now, for short, I just have it written on my chart here, MWR for midweek reversal. And the boxes here are Fridays. So I already charted out most of the Euro US dollar for a while now. And just about every week there is a midweek reversal and a trap, or a volatile move on Friday. Now, not every week does this happen, but I'd say it happens, a lot of the time on a lot of different pairs, just about every pair. Okay, this is the structure of the market. Now, there's a lot more that goes into this. Obviously, you don't want to just trade using just midweek reversals and just trap Fridays. You want to integrate different techniques such as the M or the W or the SignatureTrade. For example, here we have Friday being the trap day, and it was Asian session. They had the high of the day was created here, the high of the previous day, start of the previous day, the low of the previous day, high of the previous day, the end of the previous day, the start of this day, and you can see they did not break the high of the previous day. They just worked that high, and that's a valid M formation right there. Could have gotten in right there, or even right there. Lots of different opportunities to get in right there. Now, there's different ways to trade these trap days and midweek reversals. You can trade it. You can trade the M coming down. Well, just in this example, all right. The M here, okay. You could have traded that for a sell. And that is probably 100 pips or so. Yeah, 150 pips on a Friday. Why do these moves occur? Because on Friday, we know the market closes at 4 o'clock, right? Well, it closes for me at 4 o'clock. I don't know what time around the world you guys are, but the market closes on Friday every day for everybody, right? So the dealers will, let me just draw this for example, will create a block, okay, of structure or liquidity, and then Friday there'll be a sharp move out of that box, okay? Or in this example, it was a nice, setup right here. Here's this box, and then you can see the move out of that box on Friday, and then market closed right here. And then this is very similar to zone hopping. Okay, we have a video, our previous video, one of our previous videos on zone hopping. It's basically where the market hops the dealer takes the market and hops from one zone to the next and basically accumulates liquidity from one zone, moving it from one zone to the next. So we can see a lot of times Wednesday, Thursday is the midweek reversal. Those are the days that a reversal or retracement is likely to happen. Okay, and this reversal or retracement will shift a lot of the liquidity from one zone to the next. The same happens on Friday. Okay, the shift out of one zone to the next. Okay, so I mean, I guess you could call, let me take this rectangle here. This is one zone right here. Okay, and then Friday, if you look at it on a macro scale, and then Friday they shifted and moved to work the next week, to start the next week off in a new zone, right? Does that make sense? Okay, so then we can see the same thing. Now, if I just keep using the same box, I'm sure you could see the exact same pattern that I'm talking about. Wow, beautiful. See this? Every Friday, just about, they use the Fridays to shift the zone, or the midweek, like we can see here. The middle of the week, the midweek reversal, they actually created that peak that was forming the head and shoulders. So here's the trap of the head, and that's the nice head and shoulders pattern right there. The midweek reversal was the trap, right? So I'm not sure. This was Sunday, Monday, Tuesday, coming into Wednesday. So they actually moved the market late Tuesday. Here we can see Friday, that large trap move right here, and then the new block of liquidity. The midweek reversal. All right, we have Sunday, Monday, Tuesday, Wednesday, coming into Thursday. So this would be the low of the week. This is Sunday, the low of Sunday, coming into Monday, Tuesday. Tuesday they created the low, and then Wednesday, Thursday they reversed for the midweek reversal, and then shifted the liquidity. And then Friday they did another shift, right? They shifted it. Friday was the head of the head and shoulders. Once again, we have the head of the head and shoulders. This time it's on a Friday. And then we can see the start of the new week here. We draw the box up. We have our midweek reversal coming out. This is funny. You guys are going to love this. And here is the same thing repeating itself over and over. Head and shoulders. The trap happens. during the midweek reversal. This is Sunday coming into Monday, Tuesday, Wednesday, Thursday they shifted. This was actually late Thursday. This is Friday. And then we can see the close and the market open gap. Sunday, Monday. Friday, they shifted out of the head, and then the right shoulder of the inverse head and shoulder pattern created the new chunk, I guess, the new liquidity block. And then all that work, all right, you trap liquidity in one zone, right? This is Sunday coming into Monday, Tuesday, Wednesday. That's the middle of the week. One last trap move, and then reverse. Move all that liquidity from here back down and trap it down here, all right? Or hit any of the stop losses of people that thought that they were going to make a buck off of going with the trend here. Right? So it's a sneaky business, you guys. It really is. So we can see the midweek reversal, the trap, coming into Thursday and then Friday. Friday ends off in the same zone here, right? Shifts back into that zone on Friday. And then gaps out of the zone. Gaps out of that zone. Okay, so a lot of the times, either it will be a Friday, a midweek reversal, or very rarely, but in this case, you see here, a gap. Okay, a gap will also, a lot of the times, well, some of the times, if there is a large gap, most of the time, a large gap happens to jump over a zone of liquidity or move a certain chunk of liquidity to the next zone. Okay, here is another example. This zone here, market moved in this downtrend here, and what happens after 3 or 4 days? Now let's get into the retail trader's mind. What are we taught? What do we see on these charts? Because after all, this is all about us. This is all about what we see on the charts, what they're presenting to us. Okay? This is the start of a new week. Sunday, we see the gap, the start of the new week. Sunday, come Monday, Sunday, Monday, Tuesday, Wednesday. This is 3.5 days of downtrend. Do you actually think after the 3.5 days, almost 4 days of downtrend, they're going to go past this low that was created here? Why aren't they going to go past this low? Because past this low are take profit zones, TPs, of retail traders selling into this downtrend, because they can see it's been selling for about 3 days. They can see this too. What is it? the 1, the 2, the 3 hits of the trend line, they sell that crap, you guys. Okay, don't be that. Don't be that seller. That's the 3rd day. It's a Wednesday too, right? Come Sunday, Monday, Tuesday, Wednesday, you're going to have a reversal. Okay? 9 times out of 10, you're going to have a reversal. So, you can see that nice M formation as well. Like I said, use this in conjunction with what I've taught you about the market structure. The M's and the W's are our signature trade. So you can see right here, this is our signature trade. Nice wedge pattern, breakout to the low, 1 candle, and then that's the second variation of our signature trade, the little W formation, second leg to the low. You could have gotten in right there or right after that candle. Brought it up probably a good 30 to 50 pips. That's about 80 pips. But yeah, I mean, hopefully you guys understand this. You know, it's not that hard once you can see it for what it is, once you take your indicators off your charts. All right, let's check out maybe the Aussie. The start of a new week, Sunday, Monday, Tuesday, and this is what I like to do with my charts. I like to graph the highs and the lows of each day. So this is the high of this day. This is the high of the next day. How do you get this little marker here? You can right click and then go to time scale and click session breaks. Easy as that. Alright, we have the low of the day and the high of the day. We can see how the market comes and works the lows and the highs. Okay, so this is Sunday, Monday, beginning of the week. The next day here represents a new day. They work the high, come down. Come down to the low of the day, the previous day, work the low, stop hunt the low, start working it, create that low, come back off that low, consolidate, stop hunt, very close to the low. We can see it's just about an Asian session. They could have opened that spread up a few pips below the low, and then we can see that reversal come back up to the high. Once again, stop hunting to the high of that previous day. The low of the day created here, and then price comes back up, hits any stops above the high of the week. That was here, any stops in here, works the high of the week, creates a new high of the week. We can see that nice M formation, high of the day. This is Thursday, midweek reversal. We can see the Friday trap. Actually, the midweek reversal was here. Wednesday, they came up because we were Sunday, Monday, Tuesday, basically in a downtrend. And then Wednesday, we had that W formation, second leg W on Wednesday. Get in a buy on there for the midweek reversal. Come up, sell on Friday at the high of the day. Okay, or on Thursday at this M formation, high of the day. Sell that trap Friday move. market shifts the zone in one candle and then comes back down. You can see multiple traps on Friday here. They create the low of the day and then that W formation off the low of the day. Okay, that's actually our signature trade as well right here. Nice one candlestick breakout to the low and then stop hunt that low of the previous day here. Asian session as well. Boom, you got it. M formation at the high of the day and the high of the previous day. You got it. And now what are we expecting? Midweek reversal. Here's the low of the week, low of this week. All right, we reset the clock here, right? We're in a new week now. So by reset the clock, I mean we have new highs and new lows, but we still keep the highs of the previous week and the low of the previous week just to understand what's going on. You know, we can see here on Sunday, they actually came down. They broke out of the triangle formation here, the wedge pattern, our signature trade, actually broke out on a Sunday to the low of the previous week. The new week, the low of the previous week, breakout to the low, just working the low. We know it's Sunday and it's close to Asian session, so that breakout to the low, obviously they had an open spread, very large spread. Could have gotten any orders down there. Okay, so now we see come Sunday, Monday, Tuesday, we could see, this is why I have extended the stop hunt zone all the way to the high of the week, because we could see something like this, some spike to the high, a trap, and then a reversal. But what I'm seeing here, I like to use, this is really good for entries, you guys. This is great for entries. But to understand the overall structure, it's also good to look at a higher time frame. Okay, we can see a good, an indication of a head and shoulders pattern forming here, and that could be an indication of a downtrend, okay, of a breakout to the downside. But like I said, we could see a stop hunt to the high of the week yet. And you know what? We could even see a stop hunt to the high of the previous week, to the head of the head and shoulders. I wouldn't be surprised if that happened, but I don't think that's as likely to happen as a shift downward, because it's been in this small uptrend here for the past day and a half now, and it's just waiting for a retracement to happen here. It looks like they're creating the high here. This may be an artificial high though, so they could stop hunt that high and then come down. But anyway, that would be the midweek reversal happening there. And yeah, I mean, that's really it, you guys. There's not much else. Here's the Nzdusd. We can see I have the same thing set up. Sunday, Monday, Tuesday, Wednesday, Thursday. We can see Friday. They created that M formation. Nice little double top. And then we have Wednesday here, the midweek reversal. Come Wednesday, that nice W formation. Stop hunt to the low of the previous day. Not quite the exact low, but very close to Asian session. They could have opened that spread up, easily gotten anybody below the low of the previous day, and then shifted that entire zone in one candle. You can see it. So yeah, hopefully you guys are learning something. Hopefully you guys are taking notes. High of the day, we have that little M formation. We're actually on a trade on this one right now, expecting it to fall. We can see it looks somewhat like a head and shoulders pattern right here, but that's not really why I'm trading this. I'm trading it mostly because there was this artificial M created here. I was waiting for that stop hunt breakout to the high and then create that M that we're looking for here. Now I actually sold right around here, and we're just waiting for that fall right now. But it could, like the Aussie, come back up to the head of the head and shoulders. Could come back up to 0.6955. So I doubt that will happen, but it may stop hunt the head of the head and shoulders before it falls. Like I said, it is Wednesday today, but it's early Wednesday, so we still have some room for the actual midweek reversal to play out. So this could be, it could just go like that. Price could just consolidate for the next day or half a day, and then come Thursday, drop. We're always against the time, you guys. Okay, timing is very important. You have to be very patient in this market. Okay, so hopefully you guys enjoyed this video. Give it a thumbs up if you did. Share it with your friends if you learned something. You feel it's valuable. Thank you guys for tuning in. Peace out.